Recording. Okay, so let me restart because I've just clicked on the recording button. So a lot of today's session basically, guys, will be impacting commodity currencies. The reason is that we need to actually be very sure of what currencies to pick depending on what theme or what event have actually driven the markets. Now, as of today, let's say okay, I think there's a bit of a, now you guys can hear me okay. All right, sorry about that. Okay, so just to repeat what I've just said, a lot of movement for this week will be impacted by oil. So oil, the movement of oil actually will be impacting quite a number of commodity currencies. The reason being these commodity currencies would include currencies like the Canadian dollar, Australian dollar, and New Zealand dollar. Okay, the reason being these countries are also major producers of oil. Okay, not only major producers, but they have got oil as their natural reserves, and they've got loads of natural reserves of oil. So anything that happens with the market revolving oil would actually impact these countries. They would also include Russia, for example, and the Middle Eastern countries. Okay, so as of now, as us for trading the the forex market, especially, I'm looking at the oil chart at the moment on the 1 hour chart. As you can see, I've got a pattern that was drawn as of last week. So last week I've drawn this very funny looking zap-like pattern here. So I'll just point that out with my highlighter. So we have had this pattern that I have drawn all the way up here and all the way down. What I have actually drawn is actually is forecasting the movement of oil to actually drop to this level here. Okay, this was drawn as of last week, and it was a nice pattern indeed. The reason being because of Fibonacci. I've labeled it A as here. Okay, I'll just explain how this pattern is drawn. Give me a second. This is my A, and I've got my B around here, all right, and I've got C and D. All right, so usually what happens is prices, if at all this was a good or a high probability Z-like pattern, usually this level here will be about 50%, 50% Fibonacci. Okay, 50% Fibonacci. Fibonacci retracement. When you pull B to C, it should actually be reaching around 50%. So I'll just do that right now. Give me a second. Let me just not erase old drawing, go back to normal. And if I pull my Fibonacci from B, this is my B around here, pull it all the way up here, okay, at my high price, you will see that the 50% is here. All right, that's where I've marked the 50% to be. So what that means is that there are high chances or high probability of oil prices. As of now, it's 39.99. Yeah, there are high possibility, if at all this was a successful good pattern, it would reach this level here. Okay, and this level here is marked at 38.83. All right, so 38.83 is a potential area where oil could potentially fall to for the short term before it rises up. So for those of you who are actually selling oil at the moment, you would need to watch out for the risk area, and that risk area is marked here. Okay, that's your risk area here. All this is the risk area that would actually include support resistance and everything else. Okay, so if you want to sell or you are already selling, make sure that you are either exiting or be aware that you are approaching that area here between 38.83 to 38.64. Okay, now give me a second, let me just get rid of this Fibonacci line. So I hope that's clear for you on oil. Let me just answer some questions first. Adam, you've got a question. You're asking me why did I draw point A right that. Okay, no problem. Now this is basically a Z-like pattern, and Z-like pattern usually starts your A around here. The reason for that is we have the Z pattern usually moves like this. Okay, so it usually has a downward move, make that correction, and you've got that move here. Now this move here from A to B could also be seen as the same length, or usually if you want to predict where D goes, AB could be equal as CD. This is not an ABCD pattern. This is called a Z, a lazy Z-like pattern. Okay. As we go along every Monday, I'll introduce you to different type of patterns that are having a high probability, low risk. Okay, so this one here, you've got A to B equals C to D. Now, how do I do that equal to make it equal in length? All you need to do is you have your A pulled down to B this way. Let me just color that red. Okay, so it'll be easier for you guys to see. Give me a second. All right, let's change that to red. Okay, so I've got my A to B, let's say, and that should be equal to C to D. All right, and that is just me using the A to B equals CD to project or to predict or forecast where D might end up. So I have had two ways of predicting this line here. One is by pulling my Fibonacci from B to C and look at the 50%. That is one way. The second way is to actually pull your A to B equal in length to C to D, and that's how I got 38.83 and 38.64 as a potential area where prices for oil could fall to. All right, so this is just based on the ABCD pattern of a Z-like pattern. So the Z-like pattern or the ABCD pattern, they all have ABCD in it, but not all patterns have ABCD, but most patterns do. All right, so that's how it works. Give me a second. All right, let me just sign out a minute on my Skype. Okay, so before we move on to the next, let me see, I've got more questions here. All right, Adam, thank you very much for that. Now, any more questions about oil at this stage? We have got loads of potential trades that would actually go hand in hand with oil. What I mean by that is that you've got correlated or oil dependent type currencies. Usually they are categorized as commodity currencies. These currencies would include Canadian dollar, Australian dollar, New Zealand dollar, and other currencies for other countries like the Russian ruble, for example, even the South African rand, and a couple of others, the Brazilian currency as well. But as of today, we want to look at pairs that revolves around Canadian dollar and all that, and see whether we have got some patterns. Okay. Now, the other thing I would like to tell you guys is that we have got a lot of fundamental factors. If you go onto either FX Street or the economic calendar in Forex Factory, you'll find that this whole week will be a heavy week for the Canadian dollar. Reason being, we've got loads of data releases, especially on Friday. I'm not sure whether you've got your FX Street, let's say, I don't have my FX Street on at the moment, but for those who have got your FX Street or the Forex calendar, I want you to filter out very important data release or high impact data releases, and you'll see that you have got a lot of movement expected for the Canadian dollar, especially on Friday. So this gives me an idea that because oil would affect or impact the Canadian dollar, Australian dollar, and other commodity currencies, then you will see a lot of movement between the USD CAD or anything that would actually connect with Canadian dollar. So this is where you might find opportunities or big movements for. Okay, so just before we move on, if you've got any questions, simply type it onto the box based on this. Let me just move, give me a second, let me just clear all the USO drawings. We're actually looking at, give me a second guys, let me just move on. We're looking at GBP USD at the moment, and let me just move that a bit. Okay. GBP USD here. I've also got, let me just align this properly. Okay, GBP USD. We've also got Euro USD, but let's look at GBP USD first. Now with GBP USD, the pound versus the dollar, something really interesting. We do have a pattern, but I would like to look into the daily chart first so it's clear to you on the pattern that I'm looking at. Now I'm looking at a W-like pattern on a big angle. Okay, now ignore all these lines that I've put in because these are lines that I've accumulated since a couple of weeks back on support resistant lines, so I have not erased them, but they're not part of the analysis anyway, but I want to actually leave them on so that I could see prices react to these lines, and this is how I would like to leave it at, so it would be better for me to explain it to you as well. So what we're looking at on the GBP USD is a potential W-like pattern like this. Okay, what is expected for now is for B to fall to C. Now B is somewhere here at the moment at 1.4196, meaning that prices as of now is at 1.4196. Okay, I'm expecting prices to fall towards C, which is anywhere between 13907 to 1.3897. These are the areas that I'm actually looking at prices to fall at. Okay, or fall towards to. Before that, let me see, I think I've got some questions. Let's look at Vitatus, your question about the pattern on Dow index. We shall look into Dow and we shall look into what patterns that have emerged. Okay, we'll just look into GBP first and just remind me later on about Dow, and we'll go into there on DGIA. Okay. Alright, so as of now we're looking at GBP USD, and we're looking at something that I call it a three drive pattern. The three drive pattern, like you can see, as if you could see this clearly, I've got this blue line drawn and I've numbered it as 1, and then I've got number 2 and there's a second line drawn, and then 3 another line drawn. What that means is a three drive pattern usually signals the movement, three type movement in the same length, meaning that number 1 movement would be similar. That's actually exactly the same length as number 2. So I'm expecting number 3 to actually do that as well. Okay, around there. So I'm expecting more downward move for the GBP US dollar. Okay, and if we look into 1 hour, let's see. Right, we have got the most recent one on the 1 hour chart. I've got a pattern like this marked in gray, and that's my A B C D pattern. And if I actually pull the A to B, I'm looking at a potential, I'm looking at C that have landed at 61.8. so if it landed at 61.8, then once you pull your B to C, you're expecting the movement at 161.8. Okay, so that is just a sort of confirmation. The ABCD is a sort of confirmation of that big M movement that I've just shown. Okay, that sorry, not M, the W pattern, that XABCD. Now, as you can see, the W pattern here usually is a formation where prices would come down from B to C, let's say, and then corrects itself to go to D, and you're actually looking at trading the C to D usually, and once it has actually reached the D point, that's when you would be expecting a fall of price further down. Okay, so this is a W pattern on a long term, from medium to long term for the GBP USD. But what is happening as of now is that you've got a lot of signal of GBP falling in price, like what you could see now. If we're looking at GBP USD on a 5-minute chart, as you can see, we have got loads of movement on the downside. You have prices at 1.4190, for example, is already 10 pips under the 00. So we're expecting more fall in terms of the GBP versus the dollar. Okay, let me just answer some question. Okay, Mr. Ganesan, you've got a good question here. I can see you mentioned that last class we drew an M pattern and currently still trade sell for GBP USD. Yes, of course, we're covering the GBP USD as of now. What we're looking at, even on the 5-minute chart, we're still looking at more strength to the downside. Also, with what has happened with oil is actually dropping in prices, so that price in oil that is actually dropping is also looking at other pairs like even the GBP to actually be falling with the price of oil. Now we have got other factors as well in the UK that are actually still with the Brexit fear and all that kind of thing, but with currently what's going on in the UK as well, there's still loads of pressure to the downside for the pound. So we are looking at, let me just put it on a different time frame here. Let me just look at the daily chart, let's say. We're looking at the daily chart to look at what's going on from B to C. Only once you go onto the daily chart, on the big picture, you've got a W pattern here, okay, which actually is signaling to us a potential for price to drop further to the C point. There may be a sort of appreciation or correction in price from C to D, but that will never be a straight line up. It'll always be, quite volatile, for example, with a couple of corrections. But even though it, let's say it reached C and started to climb up, we would never know what would inspire prices to go up. So usually in pattern trading or geometric pattern, what will happen is that I will be more interested in looking at what's going on now. Hence the reason I would look at patterns from a big picture, but I would trade smaller time frames. What that means is that, like for example now with GBP USD, there is a big W-like pattern, and a W-like pattern is usually a bearish pattern, meaning that once prices have actually reached the D point, it would actually be falling. Okay, but we're monitoring trend, and trend itself as of now is signaling still a downward sort of move for the GBP versus the dollar. Okay, but we never know what would happen once prices have reached C. Usually from experience, if I've got a pattern like this, I mean everything would actually be on the downside, news will be negative, and a lot of things would be pulling prices down for the GBP. But once it actually reached the C, I would like you to just notice how news are changing to push the prices upwards. It may happen, may not happen, but I would like you to notice that movement. That's why we, even though we've got a big pattern like this, I would like you to move on to the 4-hour, the 1-hour, or even the 5 minutes chart, because once you reach a 5 minutes chart, you could look at smaller patterns to confirm the movement of the big pattern. So the big pattern trading from B to C is signaling downward trend. So what I would like to do then is I move on to smaller time frame to look for patterns that are signaling more downward trend, so that the lower time frames would help me confirm the movement that I'm looking for on the bigger time frame on bigger patterns. Okay, as you can see, GBP USD 5 minutes chart. This is what's currently happening. Okay, so as you can see, we've got prices trading for the GBP versus the dollar at 1.4183, and you've got longish candles now. You've got a lot of power, you've got a lot of pressure on the downside, we've got more movement to the downside, and then price wise, I would like to be sure or better informed about the bearishness of the GBP only after it has actually dropped furthermore. So once it has actually dropped under the 80 psych number, let's say now it's 1.4183, 83 or 84, whatever number that is now, it's too close to the 80. So in order for it to signal to me that it will drop further, it would need to go under the 80 psych number by 10 pips. Okay, meaning once prices have reached 1.4170, then I have got more reason to understand that the bears are actually monitoring. As you can see, so look at what's happening now on the 5-minute chart. We had prices going down, and look at where it has actually stopped. It stopped there at 1.4182. That's just about 2 to 3 pips away from the 80, and it's too close at the moment to the 3 exponential moving average. So if you want to confirm and say that yes, GBP is definitely on a strong trend, I wouldn't be so sure on the 5 minutes just yet. Why? Because prices are stuck at the 80 psych number, and it's in the middle of all 3 lines. You are only sure, or not really 100% sure, but you've got a higher probability to look at prices or the trend on the downside if it is under here, okay, under this level here. Why? Because this is where you have got these 3 lines here. Okay, you've got the 50, the 100, and the 200 moving average. So it should be under this level, under this level here. Okay, then you could see prices falling more, and then you can say that, okay, even on the short term we've got more strength to the downside. As at this stage it is still unpredictable of what may happen, because you look at what prices, look at what has happened here. Prices has actually just stopped coming down at the 80 level. So we would need more bears, more bearishness to actually show by prices moving downwards. So at this stage, we would like to just wait and look at the potential for prices to move downwards only through the prices as well. Okay, now if we pull the Fibonacci, let's just look at something here. If I pull the Fibonacci downwards, okay, because I'm expecting prices to fall more, I could see that prices has concentrated at this area between 78.6 to 88.6. Okay, let's say it's 78.6. Now if it's 78.6, usually if it's an A here, B here, C here, the D would be the 1.272 area, which is around here. Okay, which would be around this area here, 1.272. So let me pull the price up. So I'm expecting prices to fall at the shortest period of time to the level of 1.4156 area. Now 4156 is also at, very close to the site level. So at this point, as you can see, prices is not showing any bearishness at the moment for the 5-minute chart, which means that it might correct, it might change direction. So hence the reason we would like to always check the 5-minute chart as well. Okay, but overall, looking at 1 hour, for example, we have got a lot of uncertainty. Why? Because I have got concentration of candle in the middle of these 3 EMA lines, so it's not a clear indication of trend. Okay, it's no indication of trend here. See, it's all concentrated in this area. I'm not looking at candles above all 3 line all the way up or all the way down. I'm looking at it at a 3 o'clock angle. It's all on a 3 o'clock angle like this. So if the market is at a 3 o'clock angle, excuse me, it's giving you a lot of indication that market is uncertain at the moment. Okay, for the GBP USD on a 1 hour chart. Let me just change that. Now if we look into a 4-hour chart, okay, we have got similar issue, similar problem, whereby it's not clear to our eyes on these candles. Candles are in the middle, it's in between all 3 lines, it's not trading under and above. So we have got uncertainty on the 1 hour chart, uncertainty on the 4-hour chart, and let's look at the daily chart. Now daily chart, we have got more certainty longer term on the downside, only because we have got candles, majority of candles under all 3 lines. Now apart from that, we also could see that these 3 lines, the behavior of these 3 lines are quite nicely drawn, meaning they're quite nicely plotted, meaning that they're not entangled. These 3 lines are separated from each other. You can see, the dark blue line, the other blue, and the lighter blue, which is very close to a white color. These 3 lines are apart. They are not touching each other. They're traveling downwards as well. So this is a good signal to the downside for the GBP dollar based on the daily chart. So we still have chances to look into opportunities on the longer term for the downside, and as what I've mentioned earlier on, I'm waiting for the number 3 leg to actually come down more, and number 3 leg should be more or less the same length as number 2 and number 1, okay, marked by the blue line here. All right, so that's basically what's going on with the pound versus the dollar. Not really very clear signals, only clearer at the longer term on further to the downside, but the shorter terms with the shorter time frames are not giving us a lot of clear indication of trend, only because it is at an uncertain market traveling at a 3 o'clock angle for the GBP. All right, so hence the reason we want to look at more patterns that are concerning pairs related to the Canadian dollar. Okay, so let's see, let's look at why my chart is not really showing me. All right, okay, I think I've got some questions. Let me answer them a little bit. Let's see. Hi there, Muhammad Azman. No problems. We will have the recording sent to you. If you've got a live account already with Orbex, we can send you the recordings immediately after it's been recorded. After we've ended the session, we can have that sent to you probably by tomorrow. Okay. All right. Okay, so that's basically for the GBP US dollar. Now let's look at what's going on with the euro at the moment. Okay. Before that, I would like to just show you this. We addressed some questions as of last week. After last week's session, there were a few traders who've actually asked me about how do you determine for a certain pair which day or which hour of the day it's most active, or which day of the week it's most active. Actually, the simplest thing to do without actually going onto Google is to go onto your Orbex Live platform itself. On your Orbex Live platform, the best thing for you to do, let's say we're looking at Euro USD. All I do is I mark, you know, based on the time. Let's say all this horizontal rate line, I just mark it by 12 hours from 12 at midnight to the next day 12 midnight. I get 24 hours, right? So if I am looking at a 1 hour chart, I'm looking at 24 candles roughly in each column, okay? And then I could see, let's say if I move it this way, I could see, all right, let's say I've got Thursday, Friday for the Euro USA. We did have some move here. It's reasonably big, but let's say we look at Monday, Tuesday, Wednesday, Thursday, Friday. Okay, and we have got more movements here. As you can see, the movements here on a Wednesday, okay, and Thursday, significantly more movement, bigger candles compared to Monday, Tuesday, and Friday. Correct. And then if we move on for the following week, we have got again more movement, bigger movement on a Wednesday, okay, but then Tuesday as well, but then it sort of died down on Thursday, Friday. All right. Now the good thing about doing it like this on a live chart and on your MT4 platform is that you could then look at the highs for the week as well. See, let's say I've got Monday right down Friday. I had my highs here, okay? I had highs here, for example, okay? And the lowest for the entire week, for example, is perhaps here, all right? So if I draw a line here, last week's high, last week's low, all right, I got a sort of range for the following week. Okay, you can see, and this is this week, Monday to Friday. Sorry, last week. Last week, that's the week before, right? So then I've marked last week's high, last week low, and immediately after prices went lower from last week's low, prices went lower again. So you can see that you can always draw, you know, your support resistance, not your support resistance, your high and lows for the whole week to get an idea about what sort of trend it could be. And in this case, for Euro USD, we have got more a likelihood of a downtrend. Why? Because we have prices trending under last week's low. Okay, we got a low here and high. That's last week's high, that's last week's low, let's say, for example. So now this week itself, we have got a Monday here, correct? So Monday itself has actually it is actually trading on the last week's low, and that gives us an idea that most probably prices are actually going to be trending or trading on the downside for the Euro USD on the 1 hour chart as well. And at this moment of time, it's not 100% or it's not really sure because prices or candles are not trading under the three lines, okay? But it's more likely like prices are on the downside for the euro versus the US dollar, especially on the 1 hour chart, okay? So if I go on to the 4 hour chart, we have had various examples of patterns that have worked and things like that. But again, look at what's happening to the 4 hour chart. We've got more resistance. We've got resistance on the 100 moving average as well as the 50 exponential moving average. So what does this mean? If you've got a lot of resistance here, you've got prices fail to break through upwards and keep resisting at certain area, that means there are more likelihood for the euro versus the dollar to actually come downwards. But again, candles are in between, so we have got more uncertainty pressure, okay, in the market at the moment. So let's just wait, let's just see. But at this moment of time, more likelihood for the euro to actually fall against the dollar even on the medium term. If we go on to the daily chart, I'll move on to this one. Give me a second. All right. On the daily chart, I have got something interesting here, but let's look at the 4 hour chart first. On the 4 hour chart, there's a sort of like a Z pattern that I have spotted here. Okay, got a Z pattern like that, which actually indicate a possibility for the 4 hour chart for prices to go up to that level here. But again, if we look into the market, it's finding too many resistance, and it's not a good time to trade if you are trading following the trend. Why? Because we have got prices trading inside the three lines, and this is not really a good sign because it's showing a lot of uncertainty. Even though you've got prices going upwards, I mean, for a trader, newbie or a beginner, usually you'll see, oh, prices are indeed traveling upwards, but not really in this case because they are in middle, in between. It's showing uncertainty. Prices has not broken out from the 50 moving average here, has not broken down, so there's no much trend for the euro USD at this moment of time. The likelihood is on the downside, but at this stage we should be staying away on the euro USD as of now because it's still lots of uncertainty. Okay, and it's similar with the daily chart as well. We have got, okay, it's looking like prices are actually above all three lines, but the problem with this is that we have got 1 hour, 4 hour and daily mismatching. They're not matching, so it's giving us a lot of reason to be uncertain. And if the market is already uncertain, it's better for you to stay out of the market as well at this stage at least. Okay, now let me look at USD CHF, a very interesting pair. Not much in terms of volume to look at more profits and things like that for USD CHF, but indeed we have got a little bit of a pattern going on. There are some likely movement upwards, maybe to this level here marked in red for the daily chart. But if we move on to the 5 hours, we have got signals on the downside, as you can see, maybe making a correction. Okay, on the 1 hour chart we have got only if you zoom out you could see a better indication. We have had a pattern like this on the 1 hour chart, and okay, and definitely reached that level here already. So once it's reached that level here, this is what we're looking at USD CHF for an upward sort of move. Okay, but again it might revisit here, but as of now it's looking at a potential to reach the 0.9877 area, but again it's very close to the 80 area. So if at all you're actually going on to a uh, uptrend move or a buy move, you're looking at exiting before 98.80. Okay, 98.70 would be ideal to exit if you're looking at the buy side of things on a USD CHF. Now On the USD JPY, we are looking at quite a number of potential, because we are talking about the JPY. Now the JPY is a safe haven when oil is concerned. When oil is actually on the downside, we've got investors parking their cash, parking their investments or funds with buying the yen. Okay, so hence the reason we have got more movement for the yen. At this stage, we are looking at USD versus JPY, but it's an upside for the dollar instead. But this is on the 5-minute chart. But what happens if we go on to the 1-hour chart? Now we have got the 1-hour chart here. We've got prices on the 1-hour chart for USD JPY resisting here. Okay, it has not penetrated through the 50 it has, but not the 100 as yet. Okay, so we have got some resistance here. Now what I could say with this is that if I remove this one here, we're looking at USD JPY on the 1-hour chart. Okay, prices have actually gone up and covered that gap. As you can see, that gap has been covered by that movement upwards. All right, now here there is a potential for a Z-like pattern like this. Okay, alright, now it could be here. Let me just check with the Fibonacci. Let's pull this one down. If I pull this one down from here, from this angle, this is my A to the B, and then I got my C here. The C have landed, at this 2.24 quite on the dot here, and that's a good sign for a Z-like pattern. Okay, so let me just try that. Give me a second. Let me remeasure the movement here, and this is sort of a Z-like pattern, and usually, as mentioned, the Z pattern, the last leg, the C to D, usually ends at about 50%. So let's pull our Fibonacci from A, B, C, A, B to C. Okay, and you pull a B to C, you look for the 50%. So as you can see, it's right about time for the price for USD versus JPY to actually depreciate or start falling downwards. Okay, because this is the area where it might actually just reverse, and coincidentally USD JPY have just touched the last candle that you see, is just touched that 50 there. So it's about time for it to reverse as well. So if at all we're looking at reversal and you are on the sell for the USD JPY, you can pull this one right up and you can actually aim at the 50% area. Okay, so that's the area here, the 50%. Let me just take that off. All right, so that is the area that we could aim for a sell. For those who start shorting, it's probably best for you to look at 108.70 perhaps, and then you want to actually then take profit area here before it reach 108.35. So that's a short-term sort of sell that you can actually do. Let's look at what would happen. But if I connect this and to convert this pattern into a geometric pattern, I have got that coincidentally somehow this 50% line is actually in the middle at the axis point as well. So it's a bit of a good sign. At this moment of time, it looks like prices is finding it difficult to go above. Only after it goes above by 10 pips or so, or even more above the 80. At the moment, it's finding it difficult, but we can only wait and look at how best to trade it. But best to trade it only if it goes below the 108.70 area for an ideal entry, and you can take profit at that area here. That's for the short-term sell for the USD JPY based on the 1-hour chart. Now I've got a question by Nicholas. Nicholas says, could we look at the CAD JPY? Of course we can. And possible movement to the downside. Okay, we shall look at it, and we shall look at it together to determine the movement for that CAD JPY. Quite a good one to look at because it concerns the CAD. So let's look at that. Before that, just before moving on, any questions about USD JPY? If you don't, let's move on to CAD JPY. All right, let's see. Okay, let's look at CAD-JPY for a start. It's a good practice as well. Let's look at what's going on with CAD-JPY. Very interesting indeed. Straight away, while looking at it straight away, I could tell you that we have got a pattern like that. we have got a pattern like that, and I'll explain further. We have got upward potential for the CAD-JPY based on the 1 hour chart, and we have got ABCD here, but this is just a visual, okay? Don't take anything I say as of now as something you could trade it with. No, not just yet. We need to confirm trend, but this is immediately visually in terms of pattern that I can actually see. The reason why I could see this clearly as well, not only because of practice, but because we have got a gap down here that has already been covered, meaning that there was a gap down and we have got upward movement that is covering that gap, and that's a good sign, meaning that there are more power to the upside. But again, let's do first things first. We need to insert the moving averages. We'll start off with the 200 here, and then we go on to the 100, let's say. Okay, make it a little lighter in color, right? And then let's now look at 50. Okay, exponential moving average is the lightest color here, right? So we have got prices respecting the lines. Let's see what's happening on the 1 hour chart. We do have entanglement of the line, so a little bit of uncertainty, maybe more uncertainty, but let's change that to a candlestick chart. We have got definitely prices trying to go past all three lines, and definitely did already. It is actually battling with the 200 moving average at the moment. Okay, it's giving me a lot of indication to the upside for the CAD-JPY. Why? Firstly, we have got majority of candles are bullish candles. We've got long bullish candles. That's number one. Number two, look at the angle of the most recent movement is on the 12 o'clock. Very, very strong. Okay, and number three, we have got prices covering that gap as well, so there are more push to the upside. Alright, now if we go on to the 4 hour chart, we could see that prices are indeed, they have corrected somewhere here, but how would we know where it has actually corrected? If that's my A, let's say, if I mark that as my A here, okay, let's change that color to yellow. Let's say, oops, sorry, we've got my A right there. Let's just look at the potential ABCD that could occur, and we'll look into it more. And we've got B right there. Okay, okay, and we have got C here, right, right, and then potentially we're forecasting D to be there. Okay, now I have the D, first option D would be the AB equals CD, correct? So I'll just put that as my first potential take profit area, priced at 87.18. So that itself, 0.18, is too close to the 20. So if at all you're taking profit, you should be taking below the 20 at 10, at least at 8710 you should be already exiting. Okay, if at all that's your TP area. Now if I pull my A to B, I see that I've got a C, which landed very nicely at 61.8 area, okay, which is very nice. So once that's the case with C, then we would like to pull our B to C, okay, area, and look at 1.618 area. So as you can see, the 1.68 area is very nicely plotted close to the previous line that you have plotted. I think I've got a question coming up. It is a potential godly pattern, Adam, definitely. I may not know what kind of pattern. I can just name it as a W-like pattern. It may be a godly, maybe a butterfly, or any other animals that we may know on harmonic pattern, but I just trade the W and I try to convert it into a geometric pattern. So in this case, I'll convert to a geometric pattern from A right to D to actually look at where potential entry point could actually be. Now it's already marking the entry point to be below that area, and it's very close to where prices are trading. But in order for us to actually look into better pricing, better areas, we would like to look at price concentrations as well. Okay, in order for us to look at better pricing, probably above the three areas. We have got concentration of price here, for example. I could easily use that candle there as my concentration of price and mark the body and then mark there. Okay, mark this wick here, and I would like to then look at this zone that I've actually drawn to be having long candles through it, many support resistant, and that could be my support resistance zone. So what I'm saying is it's probably best for you to look into entering the 1 hour CAD JPY, sorry, the 4 hour chart based on 4 hour or the 1 hour only once prices has actually gone above that level here. Okay, this level here, 84 plus 84.93 above. But you can always choose to go in earlier, but it's probably best to first look into trend. It does look like you've got strong potential to the upside, but your entry timing would probably be best if you follow the price, and once prices have gone above all three lines will be a better, safer zone as well, because once you look at this area here and you look left, you've got lots of potential support here as well. So it's probably best for you to look at prices bouncing from this level here to take profit under that level here. So that's a significant, nice profit potential based on the 4 hour chart. Okay. But if we go on to shorter time frame, you probably could look at smaller patterns and trade with it. Now the direction is on the upside. You're looking at CAD due to the oil situation at the moment. You're looking at CAD as well, usually on the downside. But again, as I mentioned before, it doesn't work on all pairs. Here it looks like there are potential to the upside, but again, it's best for us not to do anything until prices have gone up, because it might just surprise us for it to actually go all the way down this way instead. Okay, because what we have done is we just look at the patterns potential visually and all that, and not really look into trend strongly. So that's what we need to actually do, is to go into a daily chart and look at potential. Now here itself, it's way under all three lines. You've got the three lines trading sideways as well. So again, there may be a risk. Okay, because here is what we could easily do, is to just come up with a pattern like this and say that, okay, we're hoping that prices can go up right to D and I'll take profit there. Now this is the most common mistake that most traders do, is that they lack the activity on determining trend. Okay, you need more activities, more things, checklists onto the trend. Here itself, it's got a risk factor, okay, because maybe the market is trying to trick you on thinking that prices could easily reach there because you've got so many upward pattern, and it's actually correcting itself going up. But we don't know that just yet until prices have actually passed all three lines, and it's a long way until prices, especially on a daily chart, to actually go above all three lines. So again, there may be a bit of a trick here, the CAD-JPY based on the 1 hour earlier on. It's so easy and it's so nice to hear of a potential upward move. Okay, but again, once you've checked it through different time frame, that could actually be fulfilled only after crossing that third line, 84.93 and above. Perhaps only at 85.10 would be an ideal buy for you to take profit at this area. If nothing goes above there or close to 85.10, it's probably a lower probability for it to actually reach as high as that. Okay, because currently CAD-JPY, it's got a, the behavior is such that CAD does actually mirror oil movement, and it's supposed to be looking at more downward trend, but it's tricking us at the moment, looking at upward. So let us wait till prices go above 85.10 for CAD-JPY for us to see more upward move for the CAD-JPY. Okay, at this stage we just don't know just yet until the prices show us. Okay. All right. So let's look at next question. From Vitautus would like me to look at Euro JPY. For sure we can do that, Vitautus, not a problem at all. Now for Adam, with your CAD JPY, have you got any questions so far? Have you entered the trade already for CAD JPY, Adam? So I would like to bring you to the 1 hour. On the 5 minutes chart, we have got prices above all three lines. Okay. Now there is a bit of an ABCD here on the short term. Okay, we do have a potential for prices to reach right about there. So there may be some potential for prices to still go upwards, reaching that area there. Okay, as you can see, that's what's happening on a 5-minute chart. But again, this could be a bit of a trap where this could be the end of where D is, and then starting to come down based on the daily, the other charts, because we have got not very clear what do you call that, forecasts in terms of the buy side of it for the CAD JPY. Okay, at the moment. So it's got very nice opportunity for the CAD JPY, but it's just that it's not very clear until prices have actually gone further, give you more strength above 84. Above 85.10 would probably be the best, okay, to discover opportunities on the upside. Alright, that's CAD JPY. If no further question, we shall then move to Euro JPY. Now, as for Euro versus the JPY, let's look at trend play. At the moment, we have got prices moving, very steeply on the upside, but again, we have got it penetrating through the 50 and the 100, but then it's playing in between the three EMA lines, and that's not a good sign in terms of trend, because that would just confuse the whole situation of what the trend is. So at this stage, for the 1 hour is unclear. If we go on to the 4 hour, 4 hour and daily, we have got clearer downtrend moves. So from medium to long term, we have got more trend for Euro JPY to the downside. From the shorter term, from 5 minutes onwards, we have got some potential of a W-like pattern, which may signal a downward trend after it has actually risen. Okay, so if we go on to 1 hour, it's just looking like it may actually correct anytime soon. Let's look at prices. What's the price now? Prices at 123.10. So 10 is quite close. It's about 10 pips and above, 10 pips or so from the 20 side number. So we want prices to move lower than 00 to signal more trend to the downside. Okay, so 123.00, 121.90, 122.90 would be where we would like to look at before we look at more chances, opportunities to the downside. Okay, so that's for Euro JPY. Let's look at it from this angle here. As you can see, we've got loads of resistance here. Now because we had resistance here on the 100 EMA, resistance here on the 100 EMA, and this area itself is proving to be strong resistance. Okay, and it's all respecting the 100 EMA. So let's look at prices here and see what's going on. What we need to do first of all is always to look at the flow of money. Okay, the flow of money for that particular pair. I'll just show you how we do that. We have got prices, let's say we're looking at the daily chart. Okay, now here itself, the flow, as you can see, we have got lower lows. This is a low, correct? And we've got potentially prices moving lower, and we've got some low here, low here, low here. Right now, with the lower lows, we've also got lower highs. So that is again 1, okay, 2, 3, right, 4, 5. Right now, here as well, and here. Okay, so once we look at this, we could then mark this as a flow downwards. Okay, so the flow is indeed on the downside for the Euro JPY on a longer term. Now, do we actually see a sort of angle as well? Okay, so you would need to then question yourself on the angle that you see. So zoom out on that, and you can see that this area here, this whole area here itself, the most recent movement, okay, itself, let's say from here, that's moving on a 5 o'clock trend on the long term. So it is definitely giving you more signal to the downside. Okay, so if I were to plot that A here, B here, C, then I've got potential to look at where D is for the daily chart on a long term. Okay, so if I pull that one here and we look at a very good landing of C at the 61.8, which is a good sign. I take the same length. First I do the AB equals CD here. So my AB equals CD gives me this area as a potential downward aim for the Euro JPY daily chart. Then I pull my B to C and I look for 1.618 because the C landed at 61.8 earlier on. Okay, so 1.618 just right there. Okay, so it's very close, so that's a good potential landing area if at all it's an A, B, C, D. So if I mark that A, okay, A, B, C, D, and we got a AB here, that's your CD there. All right, okay, so we have got AB equals CD there. So that's a potential based on just the daily chart for the Euro JPY. Okay, so now what I would like to then do is to move on to smaller time frame. We go to 4-hour chart. We'll look at what's happening on 4-hour chart. Okay, right. So we've got the area marked earlier. Okay, but based on the 4-hour chart, we still have got stronger downward move. Now there is still a potential A here, B here, and C, and then D somewhere there. So what we do is based on the 4-hour chart, we do another A, B, C, D. That's my A to B, correct? And then I mark that AB equals CD. Oh, and look at that's where it has actually just landed there in one of the lines there, which is a good sign. Okay, so I pull that one here again. All right, so let's look at this one here. We pull the A, B, and look at C. C still lands there, so we pull B to C to look at, right, 1.618. So my 1.618 comes closer or higher, and that's the third line that I have based on the 4-hour chart. So on the 4-hour chart, my ABCD looks like this. Okay, all right, so if I convert it into a geometric pattern in order to find out the entry point roughly, that's what I do, and then I mark my entry point. Under that line would be ideal, so that's way past, prices have gone way past that, but that line that I've just marked based on the center point would also mark support resistance, so we can always pull it back and look at how prices may have respected that line somewhere in the past. As you can see, that exactly happened. Okay, so there we go. So we've got a good, a very good indication there. So we have got a sort of zone where prices could reach for the Euro JPY. What we do then as well is we can then move on to the 1-hour chart, enlarge it further, and look at whether or not we have got any sort of pattern that could actually be. So that is for the Euro JPY on the 1-hour chart. As you can see, it's got more resistant. Okay, and if I pull that, because based on the 4-hour and the daily chart, we have got downtrend. Okay, downtrend movement. We got ABCD pattern on the downside for the Euro JPY. So that signals us to more potential to the downside. So let's say I have got another potential here, A here, B here, C, but let's look at Fibonacci and look at where prices have actually We got it at closer to 78.6, let's say. Okay, so let's just mark this and make that another ABCD pattern based on the 1 hour chart. Let's say that hasn't ended yet, but just roughly we'll do it this way. We don't know, prices might just push up further, okay, but this is just an indication of where prices could go lower. All right, now in order for us to know where is best for us to enter on the downside, it's probably best for us to do the cross, okay, in order for us to get an ideal center point, so that we know that this is probably a better area to look at, 122.51 and below, and 51 is exactly, you know, is too close to the 50 side number. So 10 pips lower than 50 is 40. So what we're trying to say is that 122.40 would be an ideal entry. So again, prices is too far up, so we need to wait till prices for the short term to come down to 122.40, then we could actually enter, and we can then aim at the bigger picture with the bigger pattern that we see. Okay, so based on the 4 hour chart, we can say that there is a big likelihood for prices to reach this area here, but we should wait until prices go down to 122.40 area in order for us to look at better possibility to the downside. At this stage, probably a little bit risky, because we go onto the 5-minute chart. Okay, and we could see that it's still too far away at the moment. It's still further away from all lines. It's still on the upside, so in order for us to trade a downside, we would need to wait, but there are definitely some potential for Euro JPY on the medium to long term to go on the downside. All right, that's what we could see based on the downside. That's the pattern that we could see on the 4 hour chart. It's the clearest on the 4 hour chart. So medium term downside right up to long term, potentially at 118.41 area for it to aim downwards to. Now it's only 123.13, so aiming at 118, we're looking at a very good significant take profit area on the downside for Euro JPY. Okay, but better and clearer on the 4 hour to daily chart, not on the shorter time frame as of now. Alright, so that's basically for the Euro JPY. I'll just move on at the moment very swiftly and quickly onto the gold area. Gold, we're looking at more, these are previous patterns, okay? These are previous patterns that we have seen on gold. These are based on the 4 hour chart, for example. We have A, B, C, D completed, as you can see, many times over. So those who have been selling from C, they have took profit at the D area. We have got further patterns. I've just numbered this as 1, 2, 3, 4, 5 to base that using the Elliott wave theory. Usually prices that moves up and down, if they've got a wave, it goes 1, 2, 3, 4, 5 and then correct itself downwards, and that's what has actually happened as well here for gold. We're expecting more downwards move, but as you can see, prices even for gold on the 4 hour chart is trading in between all three lines, and that is signaling uncertainty. So I've also marked gold to have the support resistance zone here. Okay, so in order for gold to signal more downward move, it needs to penetrate through the support resistance zone, which are made of the 1232.26 price right down to 1227.85. It will need to penetrate through this, and once it has actually gone further under 1227.85, only then will it signal more potential to the downside as of now, and that may make up an M-like pattern, which would see prices bounce up for gold at this area here. Okay, for now we need to look at prices falling under 1227.85 first. Taking profit area would be here or just above 1204.13 as your take profit here. This is your sell entry here, and this is how much you could be earning in terms of potential profit for your goal. That is based on the 4 hour chart. If you go on to closer, smaller time frames, give you smaller patterns, but still you've got loads of potential profit areas. So if you go on to 5 minutes chart, okay, you could see that right, you could see that prices is very close to that zone there. But again, we have got, even for the 5 minute chart, we've got loads of potential on the downside for gold before it corrects itself. So still more movement to the downside for gold, but we would want to wait until it penetrates through this to trade on a higher probability trade for gold. It'd be probably best for you to wait till prices penetrates through this zone and then trade once it goes under 1227.85. That is for gold at the moment. For silver, it'll probably be the same in terms of downward move, and we can actually see what's going on with the 1 hour chart right there. As you can see, it's got a bit of a sideways trend here. Okay. Okay, the angle itself, most recent angle is a little bit weak on a 2 hour sort of angle. Okay, even here, for example, right, it's weakening. It's not very steep like a 1 hour. It's actually weakening, okay, at the moment in terms of angle itself for the silver. All right, but most of you have actually asked me about AUD JPY. We have got AUD prices is actually appreciating at the moment. We have got A, B, C, D potential to the upside, but again, I've actually drawn support resistance zones between 84.863 and 85.006 based on the 4 hour chart. So once it penetrates through here, it'll probably be better on the upside for the AUD versus the JPY. Okay, so once it penetrates through that support resistant area, then you're looking at more potential to the upside right to this level here, close to 86.438. Alright, so that's basically it for the AUD JPY 4 hour chart. But once we go on to the closer shorter time frame, we do have a confirmation of stronger buyers getting stronger on the upside. It is above all three lines. We go on to the 5 minute chart, even further upside, so there are definitely more buying power, more buying opportunities for the AUD JPY, both trend side as well as the patterns. Okay, so we go on to the hour chart. We can see prices moving right up to the 86.438, but it's probably best for you to draw your ABCD, okay, and mark your entry point once you've converted the ABCD into a geometric pattern like so. Okay, and it's marked as here, and now it's above the 3, so we've got good signs to believe that we have got more appreciation for AUD versus the JPY. Alright, next we're moving on to the Euro JPY. The Euro JPY, as you can see, I think we've actually spoken about this one already. We are looking at more potential to the 118.41 area, so take profit just above 118.41, but we are looking at good potential to the downside due to prices, the behavior of candles and prices, but we don't see that clear pattern on lower time frames. Only the higher time frames that we can actually see a clearer picture to the downside. Okay, so you have got more potential, as mentioned before, on the from the 4 hour to the daily chart on the downside, but a bit of uncertainty or correction, potential correction on the shorter time frame for Euro JPY. Now, some of you have asked me about GBP JPY as well. As of now, we're looking at the 1 hour chart for the GBP JPY. We're looking at more upward strength. It is definitely moving above the 200 EMA, so it's a good sign on the 1 hour chart. But what happens when we look into the 4 hour chart? We have got more resistance. Okay, so what that means is that they probably the upward move on the 1 hour chart may be a correction, a corrective move, because we have got more downward pressure for the GBP JPY. Okay, so if we move on to the 5 minutes chart, you could see that way above, it's got a very nice trend upwards, but this could also be signaling a sort of corrective move. Now this is a very clear A, B, C, D. Okay, has it reached the prospective D point or not? What we need to do is we would need to pull your Fibonacci here, look into between 50 to 61.8. So that means we need to pull from B to C and look at anywhere between 1618 to 200, and that's exactly where prices have or has begun to depreciate or start falling. So that is a signal that this could be just a correction. Okay, so if I pull the AB equals CD area as well, we have got that in that area, that zone. So it's not prices is actually playing about here at the moment, just in within that zone. So once we go onto the 1 hour chart, we could see that it's resisting at the 200. Okay, and we go onto the 4 hour, it's resisting at the 50, and we go onto the daily, it's way down under all three lines. So the favor is more on the downside. So whatever you see on the 5 minutes, 30 minutes to 1 hour could actually be a correction move. So be careful on this one on GBP hourly. Let's wait until prices go under all three lines on all three time frames at least to give us a bit of a clear indication to the downside for the GBP JPY. All right, let's look at other pairs that we've not actually covered. We have got oil we have actually talked about, so we're just waiting for prices to go downwards. It's resisting at the moment on the 1 hour chart, so in more strength to the downside once it actually correct itself here and bounce down. And once it does actually head downwards, that's the aim at 38.83 to 38.64. That's for oil. Okay. We have talked about CAD-JPY as well. So I guess we've actually covered quite a number, but I think one of you have asked me about Dow Jones, so let's actually look into the last chart that we'll be looking for today. Let me just see whether, oops, supposed to be the DGIA metals, shouldn't be here. I'm not sure whether it's available on my test account at the moment. Give me a second. One second. Show all. Oh, we definitely have the. We have got almost all the indices there. We've got the SBS 500 here, and was it the Nasdaq? Was it the DGIA? Was it DGIA that you've asked for? Let me just give me a second. Weekly Dow Jones US 30. All right, give me a second, Vitatus. Let's just check. Hi there, Vincent. How are you doing? Yeah, you're right. Sometimes I just actually I just actually forget about shortcuts sometimes. You're right. Let me do that. Give me a second. That's a good shortcut key. But I'm actually looking for the DGIA at the moment. I don't seem to be able to see it on my list. Do you see yours, Corinne? Okay, give me a second. That one there is the 30. For some reason, perhaps it's the type of account that I have. I'm not sure. Give me a second. Yes, we can look at USD CAD definitely, Nicholas. Give me a second. I'm just looking at the US Dow Jones next to SPX. Yes, give me a second. Yes. Okay, good. Yes, correct. Oh. Oh, let me just give me a second. Let me just do that. Okay. Now we're on the right track, I think, Vitalis. I apologize for that. Let's look at what's happening now. USD, US 30, that's your DGIX, DGIA. That's your Dow Jones on the 1 hour chart. But for this one here, like to just apply the moving averages first. Okay, and then we'll look into 100, and let's look into the 200 as well. All right, let's see what's going on the 1 hour chart for the DJIA. We're looking at a lot of price movement onto the upside. It's got a very strong sort of movement. The reason I say that a strong movement to the upside is because it's bounced off significant lines very nicely as well. As you can see, if I put that on, you could see that you've got bounce off there, and that bounce off is showing a lot of strength with longish candle, and the second candle after it as well is actually showing a lot of strength. And apart from that, I'm also looking at the shape of it here, because some traders would be looking straight away at a double top sort of pattern, whether the double top would actually work. So if the double top does actually work and it's a successful double top, then this might be stopping around here very close to this high here, and then make a movement downwards. Okay, but also saying that the prices on the upside was actually covering this gap here. Okay, now for the double top sort of movement or theory, usually this wouldn't be a nice double top, because a double top would be nice only if this area here, it's a nice V. You know, if it's a very clean V like this, then the double top, usually it's a bit of a success. We've got a bit of jagged area here, so I'm not sure whether it's that clean of a double top. So this might signal more strength to the upside, but let's look at the 4-hour chart. Let's look at what's happening. We have got loads of support that have actually created that, and then again some more support onto the 50 moving average and created more upside moves. So again, we are looking at trend wise loads and loads of support areas that have actually encouraged upward movement. So yes, on all three time frames, we're looking at a lot of upward movement or potential to the upside for the DJIA, the US 30. But if we go on to the 5 minutes, the same. We've got a very clear 12 o'clock like angle. So let's look at whether or not we have got potential on the US 30, whether or not we've got some sort of pattern that we can actually see. Now, definitely there is a bullish Z-like pattern here. Okay, there you go. As you can see, what's happening, we have got lengthwise similar. Can you see that one here roughly, right? Let's see. Okay, we have got some movement, some potential here on the downside, and then that one there is almost the same. Hence the reason we're looking at that upward bounce. Okay, so that upward bounce was probably encouraged by this pattern here. That's the sort of Z-like pattern that we can actually see, and once it is reached around there, that area, it made a bounce upward to cover that previous gap as well. It looks like there are more outward sort of move for the US 30. Let me see whether you've got more questions. Hi there, Eduardo, how are you doing? Vitautus, you've asked me about what pattern is on the weekly. At the moment, on the weekly, let me just look at it. Let's zoom out first. There is a potential on the weekly for a W just by visual, but let's just look into it a little bit more. The thing I see here, Vitautus, as well, is there is a potential Z-like pattern here, because it's actually reaching that area there, but let's ignore that for now, and let's zoom in on the weekly chart. Yes, there is definitely a potential here on a, you're looking at A here, B here, C, and then a D somewhere there, right? If I take that upwards here and move that there, okay, and mark that as my potential D, that could still work, yes, definitely. Let's do this together. Um, let's mark that here, okay. Let's now mark from that one here to here. Okay, that's the sort of W that you can see. Yes, it's potential. Let's look at its probability based on Fibonacci. Okay, let's look at its probability. Let's pull this one in here. Now, let's use Fibonacci to pull the A to B to look at where C lands very nicely at 88.6. And if I take that downwards here, 88.6 would then look into the 113 area as your potential turning point, which is still under that high point there, which is still good. What I usually do as well is I pull X to C as well and look for the 78.6 and 61.8 area. 61.8, 78.6 would be around here. Okay, I'll explain why I do that. I just want to mark in more zones basically. Okay, and that is a potential D area there. So there's still more move right up to that area there. And let's see what else. I would like to also insert the volume indicator as well. Now what I'm looking at the volume indicator is whether or not I've got divergence, opposite movement. Now what I see here is we do have some opposite movement. Why? Because look at the movement of trend first. We have got the trend coming down, correct? All right, but the volume is actually picking up, right? That's a good sign. Because we've got divergence. Now, this entire movement is an upward move, okay? It's an upward ABCD move, and that actually is a downward volume. So we have got divergence between the two. This whole movement has diverged with this movement. What that means is that when you have a divergence, then the pattern that you have spotted would be higher in probability. So yes, you can actually look into this pattern as a potential trading opportunity as well for the US 30 on a weekly chart. And from this pattern itself, it looks like you have got more a bit more room to the upside before it makes a turn down here. Okay, so then you have selling opportunities after that, but that is where you need to look at this zone as your risk area of potential of prices to turn around anywhere in within that zone. Okay, so that's basically it for the weekly US 30. So I would mark that zone, this entire zone here, as your PRZ, potential reversal zone. That's what it means, potential reversal zone. Okay, hope that is clear for you, and hope you make some money on that trade as well. Okay, no problem, Vitalis. I hope you make some money on that trade. It looks like a good one. It looks like a nice W as well. The divergence usually is a very good tool. By the way, I have got something else. You could also carry on using the ellipse tool as well for your ABCD. So if you use the ellipse tool, all you want to do is you want to drag that and make your, on an ABCD tool, you want your B and C to be inside this ellipse. Okay, the B and C. All right, look at that, just the B and C. So alright, so I have my B and C inside this round, this egg-like shape. I call it the ellipse. Alright, and then wherever it curves here is where prices could turn around, come down. So there you go, it's right inside that zone as well. Okay, so yes, there is good potential for this one here, Vitalis. Well spotted one, very nice one. Okay, alright, there you go. All right. Okay, guys. it's just past 5:30 now. If you have any more questions on any pairs that you're looking at, feel free, let me know. And if not, we will then see each other again next week, and I shall wrap up this session and wish you guys happy pipping. Any questions at all? Let me just check. Oh yes, sorry Nicholas, I did miss that out. USD CAD will go right away to that. USD CAD, yes. Okay, let's look at USD CAD. Let's very quickly insert the indicators first. Okay, because as for me, a trend should be your friend, so it would be best for you to always try to insert the indicators first hand in order to determine the trend as best as you're able. Got the 50 here. Give me a second. Alright, there we go. So we're looking at all zoomed out USD CAD. Got a lot of movement to the downside. We have got prices, you know, looking at it now, even by zooming out a little bit on the candlestick, you could see that prices have actually gone under the three lines, but we have also got some entanglement of the line. As you can see, the three lines EMA are on the sideways trend. Then you've got candles under it, so there itself has got some sort of uncertainty at the moment with USD CAD just on the 1 hour chart. Let's look at prices. 1.2856. Oh, very dangerous territory. 56, very close to the 50. So the trend has not been determined so much just based on price itself, price action. You could see concentration of price. Can you see concentration of price here? Okay, very close to where prices are now. Let's use this body here. I'll just zoom out a little bit, zoom in, sorry, a little bit, and let's say I'm looking at price concentration here, okay, based on this body here and this candle here, right, just to create a zone, a support resistance zone. Okay, so I know where prices are at the moment and which zone it is in. Now as you can see, we have got loads of support resistance at this zone here. Okay, we've got some support here, we've got some resistance here, we've got some long candles going through here, so this is quite a significant support. Okay, I'm back, I think. Sorry about that. Thank you, Corinne. Okay, so we have got more prices, zone concentrated areas. Let me just mark the support resistance zone first. Okay, we have got this area here, right? Now, what I mean by that is that we have to look at this area here as a significant support resistance zone, meaning prices could very easily bounce up, or if it penetrates through this area and gone under this zone, then it would mark a bigger move to the downside. Okay, at this stage you see prices still playing around this area and still is above this zone, so there are likelihood of prices going upwards. We don't know that yet. Okay, it is still very early to say, but it would be best for us to look at prices. If at all you want to look at an upside, 2863 is too early. We want that to go further up to 80 side number and go above 80 to give us more power on the upside. But at this stage, let us go to the 4-hour chart. Okay, as you can see, prices again have actually respected that area. It is under all three lines, but it's respecting this area. It might bounce up, it might come all the way down. Let us just wait for prices to do what it's supposed to do, or what it has actually thought to do, meaning that once prices does actually penetrate through and go under this line, the body of the candle has gone under this resistant area, then you've got more strength to the downside. At this stage, it is very difficult to say what's going on with the USD CAD, even on the 4-hour chart. Let us move on the daily chart. If you move on to the daily chart, you've got a total different picture. We have got candles all under three lines, but again, there's a lot of unpredictability with USD CAD at this stage. Why? We have got entanglement of the line. We have got down candle here that actually hits this zone area that we have just drawn. Okay, so let us just go there. Now it's not that clear. What if we go on to the 5 minutes chart? Let's look at what's going on in the 5 minutes chart. 5 minutes chart, we have got support happening here at this zone. We've got prices at 12865, and we see that the candles are very unpredictable. We don't know what's going on yet. So at this stage for USD CAD, even on the 5 minute chart, there are no trading opportunities that are clear at the moment, unless you want to go into very risky side trading. The reason being, we have got prices indeed under all three lines, but we've got a support resistant area that is really very risky. Why? Because here it's marked as a good support area, so prices may just bounce up. If it does bounce up, it might also come back down at this area here. Okay, any one of these three lines, which are your significant support resistance, again, because they are your moving averages line. So again, it takes a long way through to pass all three lines to actually go upwards, even on the 5 minutes chart. Okay, so if at all on the 5 minute chart itself is giving you a lot of unpredictability, or non-clarity, then we want to actually avoid this pair for now. Let's move on to the 1 hour chart. As you can see, look at how prices have respected. It's just penetrated through that, but not the body. When the body of a candle does not penetrate through the support resistance, meaning there's a lack of strength. There's a lack of strength, meaning that there's lack of strength for prices to fall, but there may be some strength for prices to move up, but we don't know that yet because we have got a lot of uncertainty. Even in the 1 hour chart, why we have got the three lines moving sideways, you've got entanglement of the line, then you have got a bearish candle that doesn't actually know what it's actually doing. You see, it's not really giving you clear signal whether it's going through, the body will be going through this support resistant area or not, or would it actually be going up. So at this stage, consider this as a very unpredictable movement for the USD versus the CAD on the 1 hour chart. On the 4 hour chart, we still have that same unpredictability. It is still hanging around that support resistant area. As you see, nothing is penetrating through it. Okay, if at all you want to actually sell or go on a short, you would need for candles to go through and the second candle to come under this area, then you see more movement on the downside. When we go onto the daily chart, again, a lot of unpredictability. It's all hanging around that area, that zone that we have just drawn, okay, between 1.2860 and 1.2853. That is actually very close to the cycle level as well, and you can see how a lot of other candles are respecting that area as well. You can see, you can pull that back even on a daily chart and look at how strong that support resistant area is. So that support resistant area that we have just drawn between that two line or zone will act as a wall that only strong candle needs to actually penetrate through it. Only then you will get a better picture of what to do and how to trade the USD CAD. Okay, let's see more questions. Hon Kwet Chin, how are you doing? You asked about NZD. Okay, would you like to see NZD, or you just say oops NZD? Not sure what you mean. Vincent, CADJPY trend on the CADJPY? Yes, of course we can. Euro NZD. Now I get what you mean. Okay, let's just I just mark this one down first. Okay, so you would like to look at a Euro NZD and also USD already, CAD already, CADJPY. Okay, CADJPY. Let's look at that. Give me a second, guys. Let's go for Euro NZD first. Euro NZD. Okay, let's see. What's going on with the Euro NZD? Let's look at this one. Look at the movement itself, guys. Look at the movement itself. We have got here what's the angle of movement at the moment. Let's insert the indicators first. We have got 50. All right, we have got 100, 100, right, and then we have got 200. All right, let's look at what's going on. We have got prices respecting it as resistance. Okay, you can see a lot of resistance here. Prices tried to penetrate through all three lines, couldn't make it. We've got loads of resistance, so it's favoring the downside for the euro versus the NZD. Looks like it. We have got further resistance here, most recent ones here. Okay, and then we go on to the 4-hour chart. We have got very long candle wick there and then push downwards, so we have got more resistance here on the 4 hours chart, meaning that it's favoring on the downside. Still not very clear, but more on the downside from 1 hour, 4 hour. Now we go into the daily chart. Daily chart, we have got entanglement at the moment, so on the long term it's not perfectly clear for the euro NZD. Okay, let's look at the 5 minutes chart. We have got a potential correction, meaning that we can actually see some movement upwards, but it may just bounce back down. Why? Because we have looked at a 1 hour and the 4 hour from short to medium. It favors more on the downside. It's actually taking its time to penetrate through, okay, to go upwards. If we go downwards, we have got the angle itself is more on the 5 hours 5 hour clock, 5 o'clock. Give me a second. Sorry guys, I've got a phone call. Okay, so now we have got prices on the 1 hour, 4 hour pointing downwards. So 5 minutes definitely on the upside, but we may see it resist somewhere up there. It may have a pattern here as well, but it's not clear pattern that we can actually see even for the 5 minutes chart, because we may see an ABCD here, but I wouldn't take that as a good one to actually be looking at a upward, because it's not that clear. This one here may actually be sort of like a cup-like pattern here, okay, which means that it might actually just end around here, create a sort of handle down, right, and then go up here, return, and then shoot upwards, but not yet. At this point we still have more downward move for the euro NZD. All right, okay, all right, so that's basically it for the euro NZD. Not very clear, but 1 hour, 4 hour more on the downside. Okay, not very clear pattern either. Let me see. Okay, hope that is clear. Euro NZD, not very nice pattern, Mr. Hon. Not really clear. We've got some movement on the downside. Now on the 5 minutes is more corrective move on the upside. It's not strong enough on the upside. Okay, maybe favoring more on the downside. Okay, let's see what's going on. But it's not a clear pattern. It's probably best for us to look into more commodity currencies like the CAD, the AUD, you know, this kind of thing, because the Euro NZD itself is a lower end at this moment of time, because a lower end meaning we have group of three, let's say CAD, AUD and NZD, okay, because of how the oil movement is going on at the moment. Because of this group of three, they are quite correlated with oil. NZD is a lower end, so maybe you want to avoid NZD at this moment of time. Go for CAD or AUD first, because the movements are there, but CAD is probably better because we got a lot of fundamental going on, a lot of news releases that concerns CAD, so a lot of movement will start happening on Wednesday and Thursday, just trying to react to what may happen on Friday. Okay, so that is my tip for you on Euro NZD. Now we look at CAD-JPY, for example. CAD-JPY. There we go. Let's look at CAD-JPY. Let's look at what's going on next. Oh, here it's quite interesting. I thought we did see CAD-JPY earlier on. CAD-JPY. Okay, that is the potential there, but give me a second, guys. Uh, Sorry about that, I'm back. Okay, so we have got the CAD-JPY on the 1 hour chart. If we look into it deeply, let's see what's happening. Let me just take this away first. Okay, let's start from scratch. Let's say, okay, now CAD-JPY on the 1 hour chart, we have got prices. I've marked that zone there. This zone here, for example, let me just insert this zone here. Has been marked as a very significant support resistance zone. Okay, it's got quite a big zone there for prices to penetrate through first in order for it to determine whether it is a clear up or down trend. Okay, let me just keep all these alphabets here for a while. Give me a second. Alright, so what that means is we have got, let's say, only above here could mark off a nice upward, and only if it's down under this zone. At the moment it's playing in this zone here. It's a 3 o'clock in a way, okay, but it's a 3 o'clock that's not very clear 3 o'clock. The reason why is because we have got a bit of a trick in the market. Okay, the market is tricking us a little bit. How? Because we have got a very clear upward move here, goes above, but then we may actually ignore all these support resistance line. These are very significant strong support resistance zone. So if we want to actually trade CAD-JPY more conservatively, we need to first wait until prices go above this zone or under this zone. Okay, in terms of pattern, we have got one movement like this here, up, down, and up again. This up movement could be potentially from here going upwards, could be the X to A move, meaning that it could potentially be even a M-like pattern. But let me draw that out for you. Look at where it has stopped, 61.8. Okay, there's another line here, 78.6. So anywhere here it might actually make a correction move, a corrective move. We don't know that yet. So if it does and go under here, then what this will become is a sort of M-like pattern. Okay, right? So let's say this one stops around here. Let's say I take that and I move that down. If at all it's a downward sort of move, then you are looking at a potential M-like pattern, which means that it will go up, correct somewhere here, come down here, around here, up. Okay, so that is a potential only if prices starts to actually go under this line downwards. Then you can see it coming downwards and move up and create this M pattern. That's on the 1 hour chart. But at this stage, I would suggest for you to look into prices going whether above or below. Okay, let's just wait and see, because you see what's happening at the moment. So once it has determined, let's say, on the downward side, then we draw from here, right here, look at your entry point and enter a sell and take profit before reaching that area. So this is your downward potential. Okay, that is basically it for the CAD-JPY, but this is for the downward sort of move. Okay, if at all it's actually looking at an upward side of it, then you're looking for ABCD on the upside, but only if it goes above this line. So let's wait for price. At the moment it's playing in this area. It's a very dangerous zone here. Too many significant support resistant areas. Alright, so that's your CAD-JPY, guys. Alright, I think I would need to wrap up here. We have covered quite a number of instruments, a range of instruments, which is a good thing. And I welcome you guys to ask me on other instruments. The next time we come around, you know, there are more bag of instruments, type of currencies, and mixture of metals, precious metal, as well as other indices and all that. It'll be brilliant. So we can look at more patterns on different instruments. All right, guys. So I think that's all I have for you guys at the moment, and I hope that's clear. The recording will be available for anyone who have the live account. It will be sent to you guys. You just send me an email, and once you have actually opened a live account, we can have that this recording sent to you anytime. All right. Let me just erase all that. Okay. No problem, Mr. Vincent. All right, guys, I want to wish you guys a very good night and a good evening to some, good afternoon to all. Most of you guys who are still here in Europe, and we'll see you again next time, same time at 2 p.m. GMT, which is 4 p.m. my time, Cyprus time, which is 9 p.m. Malaysian Asian time, Southeast Asia. Okay, more or less. And see you again. There are more opportunities, and happy pipping to all. Okay, and hope you guys make good money this week. There's lots of great movements. Thank you very much, and see you next week on Monday. Take care, guys. Bye bye. See you guys.